Welcome back to the channel. 24 hours ago, we were watching Bitcoin as it pumped up to $31,500. And just within the last 4 hours, it has given back all of those gains plus some. So in today's video, I want to go through a simple pattern that continues to repeat time and time again in the markets, and it absolutely does destroy new investors. So stay tuned for that. We'll get straight into that. But first, make sure you've liked the video as soon as you click on to the channel, and of course subscribe if you haven't already. Tons of daily updates about how to invest and trade in cryptocurrency, stocks, and of course we cover the 18.6-year real estate cycle. This is the last 24 hours that you can get your entries into Bybit. Link is in the video description. That is for our exclusive giveaway of giving away 2 ETH. 4 lucky people will win half an ETH each. So total prize pool of 2 ETH. And a quick shout out to today's video sponsor, that is TronDAO. They're giving away a $1 million prize pool here. This is to their grand hackathon in 2022. It's spread across 4 different tracks. That's Web3, NFT, DeFi, and GameFi. So if you want to get involved in the hackathon, check out the link in the top of the video description, and it is spread across within each of those places. There's like 5 different winners as well. All right, guys, let's take a look at the pattern that continues to play out time and time again. This is the 4-hour chart, and it goes back to the 12th of May. I think most people will be pretty familiar with this right now. So let me throw this onto a daily chart and go have a look at a few of these examples. So what we can do to avoid getting chopped up and destroyed, especially at the times when it is most critical. And I say it's most critical because you can see what happens here. These are these yellow boxes, and the pattern here is the market as it churns backwards and forwards between a trading range. And so what happens is investors believe that this is the final drop to a low, and they start to buy up as the market rises, and of course it dumps. So essentially what we've just seen in the last 3 weeks, we want to try and avoid it getting churned up in the market. Now, there's nothing wrong with going towards your plan, using your plan, and dollar cost averaging, but the trouble comes when the emotions kick in and the market starts to rise and then tanks against us, just like we've seen in literally the last 8 hours on Bitcoin. So the market was rising up yesterday in the last 24, and then the last 8, it's basically dumped all the way back down. So this happens time and time again, and usually it goes between a trading range, and the ranges tend to get smaller and smaller. So they get tighter and tighter essentially. And then once the range gets to the end of it, if we can get this tool out here, once we get to the end of that range, we get a breakdown. And so by that stage, a lot of the investors are basically worn out from this whole rigmarole of the market going up and then back down against them, and then little moves up and down. And so the emotions just get absolutely churned out. And usually when this happens, that's usually a lot of people selling out, saying they've had enough and they basically can't stand the thought of being in the market anymore. And I think that is what we're finally going to come to. You know, this is a position that I've been holding since December of 2021, especially when we saw the market break down, which I'll get to and show you on the chart again. But that shows the market sentiment and the emotions of the investors and what they're actually doing. And so the market breaks down and it comes into a new low. In this case, we got a churny trading range breakdown, another trading range forms, and then we get a breakout. And so this just continues to churn time and time again. You can see that we went on the big run. This is back in 2019. And then the market went through and did another churning sideways range. And this happened to be, I believe this one was about 40 days. This was in the 2019, whereas the other ranges have been anywhere between sort of 60 and 90 days as well. So 2 to 3 months is a typical sort of pattern here that we see for Bitcoin. So that's the longer term time frames, whereas the shorter stuff can be a few weeks, can be a month. And like we saw here, we saw 40 days before the market dropped, fell into a new trading range, fake out, break back above, and then we came back down into a new trading range again. And this trading range lasted another 45 days, so a month and a half. So similar to what it just saw in August and September of 2019, it did it again. And so when it comes to the end of the trading range, what typically happens is the market will break out and burst into new prices, whether it's down or up. And so Our job, if we're trading the markets, is to figure out, are we about to break out and go on a new run, or are we going to break down? And so that's why I always teach to my members and also on the channel. I wait for the confirmation rather than trying to time every single low and get the bottom. I like to pay the premium, and what that means is waiting for the market to show its hand and say, I am ready to take off and go above the previous level. So this is the resistance, and you can see the market, if we throw it on a bar chart nice and clean, you can see the market just move up and then come back and test those tops. And so that gives the signal that it's ready to move on. So you might not be able to buy the exact bottom, because who knows, that could have been the bottom where it just tanked out of the market. But if you wait for the confirmation, then at least that's the ability to give you more certainty that the market is going to move up. It doesn't mean it has to happen and it's guaranteed, and there's no guarantee, of course, but at least you've got more certainty in the move that, sure, the market's about to break out. The volume's increased as well. You can see the market breaking the previous trend. It's come back to test the top, and it gives you all of these extra trading signals, these tools that you can put into your trading plan to tell you that there is more probability of getting a profitable trade. And they're the sort of things that I always look for if I am trading a market. And so that's what I want to see when it comes to getting out of these churny ranges that destroy investors. And like I said, they will destroy investors, traders, whatever it is that you plan to do, because people continue to try and time the bottom or catch the bottom because they believe that's where all of the biggest money is to be had. And of course, you're going to get bigger multiples if you do catch the bottom and sell the top. But of course, it's much, much harder because you just don't know where the bottom is. And you could see another bottom come in, and that could scare you out of the position because if you did buy that bottom, market rises up, you're feeling pretty good at that time because you're in profit. But then the market comes all the way back down to that exact price. And what happens psychologically is that you are now at break even again, and you don't want to see your position fall into the negative. And so that can then cause people to sell out at the exact same price as the other bottom before the market then moves and takes off without them. So even if people are buying the bottom, there's a lot of psychological games that can come into play if they don't have a plan. And like I've mentioned, my plan is to wait for that breakout, pay the premium, which is right there. That's the premium means the low of the trading range to the breakout of the trading range, and whatever that range is, that's the premium that I pay to ensure that I have a much more high percentage profitable trade at play when I put my money down into the market. So are we seeing something like that at the moment? Well, I think we are. We're definitely seeing a trading range, and as I've mentioned for months, I still think we're probably in for some sort of low coming into this Bitcoin market over the next few months, whether it's July or all the way as late as November or December. I still think there isn't enough sort of energy in this market for the full-on bulls to be taking this and running with it all the way up to new all-time highs. And so we've now been churning in this range for about 27 bars. So what we've seen in the past has been about 40 days all the way up to about 90 days. This could be one of the shorter ones around that 40s to 50 sort of days. So maybe we're only about just over halfway through this churny period. And the price ranges between that churn are about 25,500 all the way up to about 32,500. That's what the market has given us so far. So we'll keep watching this range. Obviously, the tighter range is around the 28K to 32K. So if there is enough of a move in there for a trade, then you're going to get traders trying to bounce or try to play this market backwards and forwards between the highs and the lows, buying up as we get to support, selling as we get to resistance. And that's why we're getting this trading range continuing to play out. So what's going to come next? Well, we have to see whether the market will break down from 28.5K or if we will break out from about 32.5K and then come to tackle the $34,500 level. That's my next really big key level to see if the market can break that and hold above it. And that would then show that we've got some more strength left in the tank to tackle higher prices. And of course, the theory can always be invalidated, and that's what I would want to see in order to be invalidated, meaning that maybe we don't get this extra low that comes a month or a few months from now, but the market finds a lot of strength. It builds a big base. It builds a support for the reason for the market to move higher. And we don't see that low, which is why we always cover our bases. Like I showed in yesterday's video, been buying Bitcoin on that plan if you wanted to follow something similar to that plan, because you just never know when the final low is in, or if you've got more lows to come. So play it safe, keep that reward to risk as low as possible. And that's why I like to use that sort of plan rather than buying all the dips on the way down. So far, it's proved pretty damn well. I'll be here at the next video. Make sure you use that Bybit link in the video description to enter the draw to win some Ethereum. So make sure you use that. It's less than 24 hours to go. And like and subscribe to the channel if you have not already. Check out the videos that I've got playing up in the top corners. That's to learn more about cryptocurrency. And I'll see you guys at the next video. Until then, have more fun to get more done.